there is something, especially for people that are just starting out, or even worse, if you've been at it for a long time and you still can't accept when you're wrong, you plant your flag in the sand, and especially if you've done like a lot of work on something, you've done your research, and you're like, this, I've already invested too much to be wrong on this. So maybe
Yeah.
talk about how comfortable you are to be wrong and move on.
Yeah, what do they call that? Sunk costs or
Yeah,
something like that, to
absolutely.
where, yeah, you just spend so much time and you just know. Um, I don't have a problem. I used to have a problem being wrong, but frankly, that reluctance to be wrong was really just born out of fear. It's a typical thing. I was afraid of losing money. And so that meant that I would lose all of it, because when you're afraid of losing money, it means that you're not going to sell for a loss, because that would be losing money. And
Hmm.
so then the stock goes down further, and then you're really afraid of losing money, et cetera, et cetera. It goes all the way down. That I think that hit me. I was that way for a very, very short period of time. And then I realized I was lucky. I realized, well, wait a minute, for crying out loud, I know I'm not a stupid man, but I'm going to be wrong a lot
Yeah.
in this game. I'm going to be wrong a lot. And so I better figure this out, and also just know the math.
Hmm.
If you lose 10% on a trade, you have to make 11% to make that up. You could do that.
Yeah.
You could do that. But if you lose 20% on a trade, now you have to make 25% to make it up.
Hmm.
If you lose 25% on a trade, you need to make what, like 33% to make it up. I mean, the numbers are not in your favor.
Yeah.
And so a good friend of mine said, he's been around forever. He said, I always tell my clients, if you want to be rich when you're older, just don't lose your money.
Yeah. It's just that simple, right?
I mean, that's the macro
Yeah.
view of what we're talking about here. If you want to be
Everything else is the
making money,
details.
yeah, just don't lose it. And that's just the way it goes. And I actually, I like to start off. I'm a pretty tentative trader. When I first started, I was like, the broker that I was using, everybody there on the floor called me a gunslinger, which I always thought was a compliment. Then I lost all my money, and I realized that being a gunslinger was not a good thing to be in trading. But I tend to trade pretty cautiously at first. I'll start with a pretty small position, because I don't want to be wrong.
Hmm.
But if I am wrong, I don't want to lose much money in
Yeah.
being wrong. And so I'm willing to wait and have the stock pay me off, basically. Have the stock say, yeah, 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 you're right about me on this one. And then I'll start wanting to build my position. And so what's the time frame for that? Well, if I'm teaching a day trading class, I'll say you may build a full position in 90 seconds or something, because you're just trading that fast. But if you're really swing trading, or trying to build a larger position, it may take you weeks or longer to build a full position, because you're going with the ebb and flow. And this is where, like David Ryan, he's a brilliant, brilliant guy, as you know. He's
Hmm.
helped me out a lot. I just listen to everything he has to say. And he always talks about building a position on kind of the next little pause.
Yeah.
You'll buy some on a breakout. You know what I'm talking about. Just trade the ebb and flow. And when the stock rests a little bit, it's in a nice uptrend, then maybe add a little more. And then when it breaks out, et cetera, et cetera. And the whole idea is, in my mind, you're always focusing on risk first.
Hmm.
And what I try to do, and I learned this really from Mark Minervini, was this idea of financing your risk, where as soon
Hmm.
as you can, as soon as the stock will let you, you want to raise your stop to where you've taken risk out of the equation. Some things that I think people make a mistake on in that regard is they'll be too eager to raise their stop to break even. And then they wind up having a lot of break-even trades on what would have been monster trades.
You know, one thing that you mentioned, and I just want to kind of make sure I understand, because you were talking about going with smaller position sizes. What is a small position size for you? What is a normal position size for you? Just so folks kind of understand where you're at.
Well, I think like for whatever your account is, I want to ultimately, I want to get to where I've got a position of like 25% in my account.
Yeah.
And that's I've had bigger positions than that. I had a really big position in NVIDIA. It was a best trade I made in a long time, possibly ever. But typically I think the numbers are that if you can get 4 positions of 25%, you've got you got a good, strong account, and you're going to be really growing that. But I will tend to start out with about maybe 10%. If I'm going to take a trade in initial position, it would be 10%, maybe even a little bit less. But if it's too much less than that, especially if you're managing your risk, it's not going to make much of a difference. You know, if you got I know people go like, well, how many stocks do you have? Oh, I have 28 in my account. Okay, well, what are you going to do with that? You know, you've built in mediocrity, that's for sure.
Yeah.
So the idea for me is if I have, say, a 10% position, and then my risk tolerance is maybe 1.5%. I even like to, if I can, go a little bit less than that. But 1.5% of my account value, that's something that I can manage. And you know that people get confused about this. Oh, you only risk 1.5%. Those are really small positions. No, those are tight stops. You could have the biggest position that you want. But it's just the difference between where you buy, where you're going to get stopped out, multiplied by the number of shares. That number, I try to make sure it's not more than 1.5% of my account, because you could be losing 10, 12 trades in a row, and you're still going to be okay if those losses are really tight. Does that make sense?
Absolutely.